Welcome back to Finance in Focus. I'm Brady Hansman. After yesterday's trading session, many investors are asking the same question. Why did technology stocks struggle while the broader market held up relatively well? Although the major indexes finished mixed, much of the weakness was concentrated in the technology sector, particularly artificial intelligence and semiconductor companies. The Dow Jones Industrial Average managed to post gains. The S&P 500 finished little change, while the Nasdaq moved lower as investors sold shares of several large technology and chip companies. So what was driving the market? One of the biggest stories was the continued pressure on semiconductor stocks. Companies tied to artificial intelligence, infrastructure, including chip manufacturers and equipment suppliers, saw increased selling throughout the session. After an incredibly strong run over the past year, investors appear to be taking a closer look at whether future earning growth can continue to justify current valuations. Another major focus this week is corporate earnings. Several of the largest companies in the world, including Microsoft, Meta, Apple, and Amazon, are all scheduled to report quarterly results. Because these companies represent such a significant portion of the major market indexes, their earnings report often have the ability to influence the direction of the overall market. Now, the Federal Reserve is also in focus. Investors are waiting for the Fed's latest interest rate announcement later this week. While expectations generally point toward interest rates remaining unchanged, market participants will be listening closely for any updates regarding inflation, economic conditions, and the outlook for monetary policy over the coming months. Geopolitical developments also remained on investors' radar. Recent headlines suggest that tensions in the Middle East had eased compared to earlier concerns, helping push oil prices lower. While markets generally respond positively to lower energy prices, investors continue monitoring the situation closely since geopolitical events can evolve quickly and affect global markets. One of the more interesting takeaways from yesterday's trading is that the market wasn't moving as one. While technology stocks experienced weakness, other sectors were much more resilient. There's a good example of how different parts of the market can respond differently depending on earning expectations, economic data, interest rates expectations, and overall investor sentiment. Market sentiment itself can also change quickly. A company can announce positive news, but if investors believe expectations have already become too optimistic, the stock may still move lower. At other times, companies can deliver results that simply meet expectations, and the investors respond favorably. That's one of the reasons market movements can influence not only by its news itself, but also by how investors interpret that information. With major earning reports, a Federal Reserve meeting, and continued geopolitical developments all taking place this week, markets will likely have several important events to react to over the next few trading sessions. We'll continue following these developments and keep you updated as new information becomes available. Thanks for watching another Finance in Focus. We'll see you in the next episode.